Portions of the following program may be pre-recorded.
The following program is sponsored by Max Out Savings Advisors. The views expressed during the broadcast are solely for entertainment purposes and do not necessarily express the views of KNTH, its management, Max Out Savings Advisors, or its sponsors. Max Out Savings Advisors and members of the Max Out Savings team may or may not hold securities mentioned during the show. Plan for your prosperity, prepare for your retirement, safeguard your savings, and nurture your investments. This is the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Now, here's your host from Max Out Savings Advisors, Ted Gioka.
Welcome to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings investments in your retirement here on the Max Out Savings Show. Our show is all about building up wealth under today, dealing with retirement, in building up your savings and your wealth. Really, that's the key to the whole thing. Our motto and philosophy is to save aggressively and invest conservatively. Save aggressively, invest conservatively. That's the key to building up wealth. Start with your 401k plan and make sure you're putting away enough. Our recommendation is 10% minimum plus the company match. That gets you up to 13%. That's where you need to be. And really, we want to start there because that's the building block to take you to the next level. And we got a lot to talk about on the show here today. Again, we've been keeping you informed with really a lot of these things that have been happening in the world with the Iran war, other issues out there, and where to go. And I just want to touch base again. It's just the whole thing is just pretty incredible overall. We're dealing with a number of things out there right now, but the big one is really this Iran war, which we're involved in now, and I want to cover some of this stuff. At the beginning, when this thing started, we said, look, one of the things is you've got to watch out for the Qatari, the natural gas trains. If those are damaged, it's a big problem, and we saw this week that Iran's Pars field was hit by was bombed, and that triggered, which was a mistake, but it triggered an attack by the Iranians, their South Pars field, on Qatar's North field, and this is and this is important to understand, is because the Qatari Iranian South Pars field is the largest natural gas field in the world, and they produce LNG, liquefied natural gas, and they ship it around the world, and so we hear a lot about the oil. The straits are closed, oil's not moving. Oil's one thing. There's a lot of oil supply, or there was out there. There's not a lot of excess storage of LNG. It's hard to store, and you've got to typically store it. It's expensive, and so what you're looking at is a situation where you're dealing with an issue that's a big issue. In the LNG, the United States exports LNG, that's one of our biggest exports. The Asians get the majority, about 85% of their liquefied natural gas comes from the Middle East, out through the Straits. The Europeans get a bunch of it as well, and so what we're dealing with is the gas trains were bombed. They were hit in Iran, and so this is shutting down, which means there's a huge drop in LNG, and this is a big story. It's a much bigger story than people understand, which puts a lot of countries in trouble in the Middle East is how do they get this gas? And it's not just the LNG. So Qatar produces the natural gas. It comes out of the ground. There's various things they get out of it. One of them is they get out something called liquefied petroleum gas, LPG, which is huge in the developing world for cooking. People use they use liquefied petroleum gas for cooking, and India is critically short on cooking. They're so critically short that the Iranians let some LPG tankers through, and the U.S. agreed to it because they've got to get India this gas, because these people, they're dirt poor and they can't afford a lot. So we've got that. We have a shortage of LNG as well. Now, one of the other things that comes out of that stream of natural gas is helium. Helium is a critical component for many things, particularly the production of semiconductors. Up to a third of the helium comes out of the Persian Gulf. And the second biggest one is really the United States. Exxon actually controls. It's one of they got 20% of the world's helium production. We produce it. A lot of it comes out of Wyoming. Russia's a big producer. Algeria, and of course the Persian Gulf, particularly Qatar. So there's going to be a shortage of helium as well. And the problem we run into is this is going on for 3 weeks, which means nothing is going out of the Persian Gulf for 3 weeks with LNG, LPG, helium, or anything like that. Now they're saying two or three of the 14 LNG trains were hit, and it could take 3 to 5 years to replace those, which means we're going to see shortages going forward. I think that number, I'm not sure. There could be more than 2 of these destroyed, and they might just be. I don't think it's going to take 3 to 6 years. If the United States or if Europe had to do it, I think the Chinese can get it repaired much quicker, based on some research I've done there. But it still shows you a problem. And even if looking at some of the other ones, some of the Wall Street firms, they're projecting if the war ends tomorrow, we're going to be back up to 80% of LNG production in 2 months. Again, we have a massive deficit. They've used up all the supply. In some countries around the world, some smaller countries like Sri Lanka, places, some of them are going on 4-day work weeks. It's a real issue out there. And this attack, Israel bombed the South Pars field of Iran. That was a huge mistake because the retaliations on the Qatari, the Saudis, the Bahraini, all the energy infrastructure is really putting a huge crimp on everything in the world. And so what you have to understand is this is a thing that's going to take time. So and the reason we're bringing it up is when you see people talking like, oh, we're going to open it up, we're thinking of ending the war tomorrow, the strait's going to open up next week. It doesn't make any difference. The damage is done, and this is not the worst case scenario, but it's not far from it out there right now. And Houston's an oil and gas town, so people in this town get it. But it's a big issue, and looking at it, and again, it's not just oil. It's liquefied petroleum gas. Again, huge in the developing world. Helium. There's all these fertilizers. It's all types of things out there. That there's a big sulfur, ammonia. These things all come out of there through those big gas fields in the Middle East, and so in oil too. But some of the gas is really much more critical for a lot more things than people realize, and so this is a big issue. And the other thing is we're dealing with is there's a disconnect. West Texas crude is $97, and it's shown remarkable restraint. It really does not. I think it hit like 120 one day, and then immediately fell down by the end of the day. The biggest, move in oil prices in history, and it just parks underneath $100. You're like, well, it's only $100, nothing to see here. Well, if you look at the Brent crude, that's 109. Well, it's not too. But the problem, those are commodity traders. Okay, those are guys. They're trading paper around. Now, if I want to go, hey, look, tell you what, I want the tanker load of oil if you can get it to me in 2 weeks. Whoa. That's not going to cost you $97.50. That's going to be a different number. Okay, if I want Omani crude, I'd like a load of Omani crude in 2 weeks from Oman, quality driven, $155 a barrel. Okay, if you want jet fuel in some places in Asia and other places, it's $225 a barrel for delivered. So understand, there's two separate things. There's the paper world, which they have on TV, on CNBC all day long, that everybody's watching. Oh, thank God it's under $100. And then there's how much is it for my tanker load? That's a different number. There's paper and there's real. This is something that the Max Out Savings Show has been talking about a long time. Is this is why I've been saying you want to be in these commodities. You want to own physical things. The paper world. We saw what happened to the silver, particularly, where there's all this paper supply all over the place. But then when people start wanting physical, there's like, well, we don't have any. Or with the COMEX, there's been two instances where when they're coming up to delivery where there was a air conditioner failure or a computer security failure or something the day that the things they're scrambling to try to stabilize and so there's not a failure in the market, and so it's the same thing is happening in the precious in the energy sector. What I want you to understand, it's a very bad situation in the energy market. I mean, it was going pretty badly up. Once the South Pars field hit, and then the Qataris got hit, and then the Saudis got hit on the energy infrastructure. Because remember, keep in mind, if the strait opens up, it's back to business as usual, back and forth. But if the loading dock is blown up, if the pumping station is blown up, if the air compressor station is blown up, for the LNG, that might take a month, that might take 2 years, and you can't load anything. So you can have this big gas field or oil field out there with all this production, and it's not going anywhere. And so there is no oil or gas ferry, delivering, waving a magic wand and making the stuff appear elsewhere. And it has to be moved out there. It has to be loaded on a ship. And so our work, and this is why it's going to take time. If you look at some of the forward curves, it's showing further out. Even you still have to deal with numbers further out, and this is one of the big things that's really going on out there is that this is not a quick fix. So anyway, tell you what, we're coming up here on a break. We're going to go over this again after this quick commercial right here on the Max Out Savings Show.
The Max Out Savings Show with Ted Gioka is taking your calls now at 713-339-1070. Ted Gioka will return after these messages.
This is Ted Gioka, host of the Max Out Savings Show, one of Houston's most popular financial radio shows, celebrating over a decade on the air in Houston, Texas. With stocks at record high valuations and interest rates near record lows, you need to have your guard up. You need to have a plan to manage risk to your retirement. Do you? At Max Out Savings Advisors, we have a risk-based value investing approach to your retirement. If you would like some help managing your retirement, go to maxoutsavings.com to set up an appointment. That's maxoutsavings.com. Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website maxoutsavings.com.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
This is the Max Out Savings Minute with our good friend Ted Gioka. Ted, the war in Iran is going on. Hopefully they're going to wrap it up soon. What do you think is going to happen with all of this?
Well, Chuck, it's a couple things. The question is, when does the war end, and what is the price of oil, and what is the price of oil going to be in a month or two? The United States, we're in good shape. We don't really import much oil. We have so much oil and gas. But other countries, particularly the Asian countries, and to a lesser extent the European countries, they import a lot of oil and LNG, liquid natural gas, and those guys, they're under a lot of pressure. You're seeing a lot more volatility over there. So the question is, how much damage is done to the world economy? How much damage is done to the oil fields? How long is it going to take? Do we have shortages of not just oil and gas, but chemicals and fertilizers? And where does it go down the supply chain?
That's right, Ted. We're going to talk about that and more this coming Saturday morning at 10 a.m. on AM 1070 and FM 103.3. The Answer. We'll see you Saturday morning.
Thank you, Chuck.
AM 1070, The Answer.
Once again, here's your host for the Max Out Savings Show, Ted Gioka.
Welcome back. Welcome back to the Max Out Savings Show. I'm Ted Gioka, and we're talking savings, investments, and your retirement. And looking at some of the, if you look at the curves going out, even almost a year away, they're still projecting prices close to $80 for oil, and so this is a big issue. It's going to continue, and it's going to take time, and that's what we want to kind of communicate today on the show is this is not a quick fix. You know, the one of the things we're really running into is we get these things. I mean, if you look at it yesterday, the markets were just all over the place. And I mean, during the day, several outlets reported that President Trump might have to put troops in, and then it changed, and it's like, well, we might not put troops in, and then it was we might be just about done. And Netanyahu said, well, we might be able to, the day before, we might be able to keep the regime in place. And one of the things they're running into is they're trying to control the stock market. The Iranians are looking at the stock market, and they're thinking if we can hold out long enough to sit for the stock market to sell off, it's going to be put a bunch of pressure on President Trump. And this is something we talked about in the recent shows is there's this fixation on the stock market, and I'd rather have a country that fixates on production capacity, on jobs, on buildings, on factories than the price of the stocks. And so they've gotten themselves into somewhat of a situation on this, and they know Trump likes to sit there and watch the stock market closely. And this is why, the White House will leak something, or Trump will say, look, we're about done here, and the market goes zooming up, and then it goes down. Well, the problem is we're still dealing with pretty catastrophic damage across the Middle East oil and gas production facilities. I won't say we're dealing with substantial damage to these things, and we don't know how much yet. Maybe it's not a lot. I mean, a lot of times keep in mind when they shut down some of these facilities over the last couple of weeks, basically what they did is they emptied out the oil and gas in the refineries and they flared it all off, and then they put water in many of those places. So you see the storage tanks, so they didn't have anywhere to put the oil and gas, but the actual production facilities in many cases were again, they tried to minimize any potential damage. So it's going to take some time to figure this out. So here we are. What do we do in this type of situation with the markets? What's going on? And I think we have to take a look at the markets, and this is why we've talked a lot about the need for caution to protect your portfolio, put some hedges on, have cash, those type of things. I mean, it seems like every max out savings report we say talk about the importance of cash, and we talked about recently. I mean, for a year we talked about the overpriced tech sector, and if you look at the Nasdaq, it hasn't gone anywhere since September of last year for all practical purposes. Now, yeah, it's in the same place it was back in August right now, and so in huge sell off in that sector. But where do we go from here? So I think we have to look at a couple things. The situation in the Middle East for the energy is worse. It looks that prices are still going to go up, and they're still going to work. Again, it's all about physical. It's not about paper. I can go create all the contracts on the COMEX exchange for jet fuel, but when it comes to filling up the airplane, those contracts and a gallon of fuel that you already have is all you're going to get. You're not going to get anything out of that. And this is one of the things. We built a financialization world, and we're transitioning from a financialization to a physical world. We're moving our factories back to the United States. We're moving our plant and equipment back here. People are investing in oil and gas, are investing in production, they're investing in factories, but these take time. And so we have a severe problem in the Middle East. We have gasoline up about 35%. We have diesel fuel up about 40%. In the country runs on diesel fuel, which means anytime you buy a product at Walmart or wherever, it's been trucked in on diesel fuel from a train or a truck, and so the cost of everything is going to go up. So we're dealing with potentially higher inflation. We're dealing probably high oil and gas prices at best case for at least another 3 or 4 months, at the best case. And so all these moves were like, oh my God, there's a deal, and oil prices plunged 10. Well, they might plunge 10, but maybe they're not trading at 97, but they'll still be at maybe 85, which is still pretty high. And so this is an issue. The other thing we're dealing with is a private equity. I won't say crisis, but it's real issues in the private equity market, which is slowing down capital to smaller companies. Because they've been selling private debt, private credit, to take over companies, to purchase companies, but they weren't marking them to the market. So they would say, well, look, it's a loan. So as long as the loan is good, we're not going to worry about it. Well, if you're a bank, you watch those like a hawk, and but the private equity guys are much more aggressive, and they're willing to take more risk. Well, with AI coming in, it's made some of the software companies in particular obsolete. And now with higher energy prices, it's going to put more pressure in private equity companies because they have a lot of debt. Remember, they don't have a bunch of cash in the bank. They have a whole bunch of debt that they have to service. So that's causing problems out there. And then the other thing we're seeing is interest rates. Interest rates have been moving up in here, and this is an issue. If you look at the 10-year Treasury, it's gone from 3.95 to almost 4.4% here in the last couple of weeks. And just as important, if you look at the top 5 central banks in the world, for the into next year, they were projecting 600 basis points of total of total cuts, which means maybe the U.S. cuts a half, Europe cuts, the Bank of England cuts a half, and so it added up to 600 basis points of cuts. You go, well, this is great. We got the wind at your back. The Fed's got your back. Everything's going. The market's going up. Well, that's shifted over to they're now pricing in 500 basis points of increases, which means we've gone from hey, interest rates are all falling, this is great, no inflation, to more inflation, interest rates are going higher on the short end. This is short end money. And so it doesn't mean interest rates are going up 500 basis points, but it means that whereas maybe I think it's 5 or 6 the big central banks in the world, they're probably going to have to raise rates maybe 0.75 points or something like that, which is before it was like they were going to drop them 0.75 points. So interest rates are going up. Now, the wars the market's sold off. The market is oversold. There was a lot of talk about I think it's the S&P indicator that went. I think it was a -7, and typically markets bottom when it's -7. And so Jim Cramer was talking about you got to be buying Thursday, and they were buying, and because it's an opportunity. But those oscillators. That's usually pretty good when nothing changes. If something goes wrong, that oscillator will get a lot lower, and then that's when you get big declines in the market. And that's why we really saw the sell-off in the market this week with the S&P 500 dropping about 1.9% this week as things started to accelerate. Now, look, likely we're oversold. The president's going to try to come out and say something positive because they don't want the markets to go down very much. They're watching it real closely. But the question is, there's not a lot of support underneath this market. We've been saying we thought it would go to the 200-day moving average for weeks. Everyone's like, Ted, we've gone down enough, and it really has gone underneath the 200-day moving average. It was remarkable it took so long. We've been talking about this for a while. But here's the problem with everything. We should get some type of bounce in here. They're going to try to come up with something positive. Well, honestly, the situation in the Middle East is not good. Well, if you look at the market, it's down. So there's all this panic in the world right now. But bearishness is high. Markets oversold. We got a war in the Middle East. You've got oil and gas facilities on fire over there. It's pretty much of a disaster. And the market's down 5.3% year to date. And if you look at it, it's down 7% from an all-time high after 2 or 3 years of going up. So it's not like it's been going up. It's expensive. It was overvalued. It's dropped 7%. And that's the problem. That's the real problem we have here is this market. Some stocks have sold off quite a bit. If you look at some of the numbers, I want to say it's 46% of the S&P 500 stocks are in a bear market, down about 20%. It's about 55% for the NASDAQ stocks. So there are a lot of stocks down, but the averages overall, and all these people in these indexes really haven't sold yet. And we had option expiration yesterday, and it was a massive amount of it. $5.7 trillion worth of options expired. And these options are all being used to hedge the market, which means their hedges are gone now. And this is likely what you saw happen is they had to redo the hedges, and that's what caused the market to really break down from it's been holding kind of that 6,600, 6,650, for really, almost 6 months, and then it just cascaded underneath it, once they had to start doing these options. But again, the problem still comes in. We have interest rates are going higher. Oil prices are going to stay up. We have the private credit issues, and it's slowing the economy down some. So again, typically, if you would say, okay, Ted, here's the situation, private equity crisis. Rates were supposed to go down about 2 months ago. Now they're going to go up on the short end. And you've got a war in the Middle East. And also, there's a certain percentage of the oil fields and gas fields, the infrastructure has been hit. What would you say the market would do? And most people would say, well, 15-20%. I mean, that's pretty much. But instead, we're down 7%, and that is the problem with this market. And that's why, I mean, look, likely, I think they want to try to do something. But here's the issue, to solve this war is, here's the problem. They go, okay, here's what we're going to do. We've done all this damage to the Iranians. They're not going to be able to build a nuclear weapon, for another 10 or 15 years. We've accomplished our goal. Okay, and then the Iranians pop up and go, look, we're going to let Indian and Chinese ships and European ships go through, but American ships can and Israeli ships. What we're going to say is, hold on to the break. What we're going to do is we're just not going to let the American ships and the Israeli ships come through. But anyway, and we might put a tax as well on ships going in and out of the Persian Gulf. Okay. Iran, you just made Iran one of the most powerful countries in the world. No one in the Middle East is going to listen to a word we say because we can't protect them. They're going to have to go to Iran and make their deals. Okay, so in the United States, we'll have lost power around the world. It will be one of the most significant defeats in the United States history. This is the problem we have right now, is we've really kind of, I won't say backed ourselves into it. Iran is backed into a corner, and so are we. And you're going to have some type of. I don't see how you cannot let Iran. You can't have a war with Iran over nuclear weapons and stuff, and then the agreement is we're not going to make any nuclear weapons, but we're going to get to control the Straits of Hormuz. That is the worst deal on planet Earth, and it would be a humiliation to the United States of America and a severe hit to our ability to project power around the world. And so, I mean, this is a very complicated. I'll give you an example. The Saudis called up Pakistan. He said, look, we'd like your help. They've attacked our oil fields. The Iran has attacked our oil fields. We need your help. And they're like, no, we're staying out of it. And they're like, wait a minute. We had a defense pact with you guys. And they're requesting, they gave them like $7 billion loan. They want the money back. This is the problem that we're running into out there. And so Iran has to be defeated. In my opinion, unfortunately, Iran has to be defeated. Likely, we're going to have to put some type of boots on the ground. Iran is an incredibly mountainous country that's almost impossible to get into. But what you do is you seal them off in the middle. You get control of this around the straits, and if you want to just real aggressive, you get control of the oil fields on the western side of the country and the plains, and you take out all the passes and you basically isolate them. It's just not a good situation. Any way you look at this is the problem because the situation with Iran is such that we can't let them control who goes in and out of the Persian Gulf. At that point in time, they've won. It's worthwhile for them to sit there and take all this hit because they've got what they want. They've got control of the Middle East. And so this is a very complicated thing. And so, again, I think you want to – can we get a rally Monday? Look, likely we're oversold. I mean, if they don't rally Monday, this thing's going down big. But the problem they have is somehow they've got to come up with some type of solution in here, and it's looking increasingly like some type of boots on the ground. We're not going to go in and invade Tehran, but we could take the Straits, and we you could do other things. And so we'll tell you what, we're coming up here on a break. We'll take that. I think we got some calls coming into 713-339-1070. We'll talk some other things about some of the other areas out there. Precious metals dropped this week. What's going on there? Again, very complex, a lot of moving parts. And again, this is why you wanted to you run a portfolio for retirement that has extra cash, has hedges in place, that's diversified. So when you get in these type of situations, you can successfully manage yourself through them. Anyway, we'll be right back after this quick break right here on the Max Out Savings Show.
If you've got savings and investment questions, Ted Gioka has answers. Call the Max Out Savings Show now at 713-339-1070. We'll be right back.
I'm Ted Gioka, and I approve this message.
Max Out Savings is looking at rising interest rates, the bond market, and our country's spending to project the impact on your retirement. They use that data to help you flex to current conditions with your future in mind. Call 713-627-0400 to learn more. That's 713-627-0400 or maxoutsavings.com. Remember, you can hear the Max Out Savings program right here Saturdays at 10 a.m. on AM 1070 and FM 103.3. The Answer.
Hi, I'm Sam Malone, the owner of Houston's cutting-edge media company called 512 New Media. At 512 New Media, we create amazing videos that companies use on their websites, telling their story in bold colors with exciting animation and graphics. At 512 New Media, we also shoot television commercials and instructional videos. And if you want to show off your business from the air, we're ready to go with our drone video aircraft. Let us help you create your media message. We're online at 512newmedia.com or call 281-822-8803. 512 New Media is Houston's only media creation and distribution company that's actually owned by someone who's currently on the air. And that gives us an incredible edge when creating content for consumers to use on their laptops, tablets, and smartphones. Standing by to create your message, we're 512 New Media, 512newmedia.com.
Hi, this is Ted Gioka of the Max Out Savings Show. Our motto and philosophy is to save aggressively and invest conservatively. The world is changing at a faster rate than any time in the last 50 years. The investment world has changed. Have you changed? Inflation will destroy your retirement. It is a different world that requires different strategies and ideas. The era of indexing and investing is over. If you need help, listen to the Max Out Savings Show. Our show airs every Saturday at 10 a.m. and Sunday. We talk about investments, the world, and where the world is going today, and help you understand it and help you save money and build up wealth. It's the Max Out Savings Show. And if you need some help, go to our website, maxoutsavings.com. That's maxoutsavings.com. On the website, you can sign up for the free Max Out Savings Report. Our report covers all types of these big issues, the changes in the world, and helps you understand and protect your retirement. So go to the website, maxoutsavings.com. In the 1970s, the big song was the Bee Gees' Staying Alive. Well, it was difficult back then to stay alive if you were a retiree. Inflation was running rampant, and since then, over the last 25 years, it's gone away. Well, inflation's coming back, and it's going to endanger your retirement. If you're a retiree, inflation is your biggest enemy. Hi, this is Ted Gioka of the Max Out Savings Show. If you need help with your retirement, I'd like to help you out. Go to maxoutsavings.com. That's maxoutsavings.com, and we'll show you how you manage through inflation. Don't let inflation destroy your retirement.
We return now to the Max Out Savings Show. Here's Ted Gioka.
Welcome back to the Max Out Savings Show. We're talking savings, investments in your retirement. Do we have a phone call coming in?
Yeah.
Welcome to the Max Out Savings Show.
Good morning, Ted. Listen, I just wanted to offer I wanted to offer a comment before I ask my question, and that is my big question is how is this population going to overthrow this government without guns? I don't know how the weapons are going to get to the people, but somehow or other they got to get to the people. And I'm a believer that a lot of the 32,000 that died were probably a lot of the older fighting type people. Maybe not, I'm sure women were involved that were executed as well. But this regime, I think, to take out this IRG regime, it needs to happen in some form or fashion, because if they're left to exist, I think it's just going to be a matter of time before any benevolent regime is overthrown again. Now, I wanted to ask you a quick question about you touched on fertilizer, and right now we're in the growing season with the farmers. So maybe the U.S. might be able to kind of muddle through this thing, but for the rest of the world, this is going to be an issue. Do you still see opportunities in the fertilizer stocks by chance? or is has that ship sailed?
That's a good question. Okay, look. Full disclosure, we bought a fertilizer company a week ago, and we're up on it, and we ended up selling it down a little over 10% down, just because it looked like it was. And that's been one of the few mistakes we've made. It's been, but what appears to be happening is the cost of the sulfur and the ammonia is going up as well. And so, I mean, I thought it was really going to work pretty well, but they're just they're just constant selling into the stocks, and we're like, this just doesn't look good, and we got out. And so I think there's going to be a shortage, but the problem is what some of these people have, if you look at them, they've got like phosphate and stuff down in Florida and places like that, but then they've got to mix some of it, and some of the other stuff where they need the sulfur is going up tremendous. Again, sulfur, big export out of the Persian Gulf, and ammonia. So I would say yes, but we tried it and it really didn't seem to work. And the pricing is really a lot more complex. I'm amazed that didn't work, but we're just trying to manage things pretty closely in here.
Well, you mentioned sulfur, and I recall when I was in college, I know Freeport McMoran down there in Sulphur, Louisiana. You go down, and I was back then. I've never been down there since, but there were literally mountains of sulfur. They had no place to put the stuff. Now I don't know if that stuff has somehow been depleted or where it is now. Urea and potash, and all of that, and phosphates. I don't know anything about that and how that stuff is mixed together and processed, but I do know that there used to be a lot of sulfur down there in Sulphur, Louisiana, and I would assume it's probably still there, but I don't know.
I think it might be closed. I think they've closed some of that. I've driven by it a number of times, but yeah, look, I mean, it's a complicated issue, but that's just what I'm hearing, because I was surprised because the prices went up, and I thought that was going to work out pretty well. We did a couple different things, and most of the moves actually worked out, and that one just didn't. And but yeah, I would be careful with the sulfur, although I still can't quite. I mean, one side of me thinks I should have held it, but it was just really, the cost of that ammonia and which is, I think they used to make the urea, and then also the cost of the sulfur is just I mean, it's like what we talked about earlier on the show, Charles, is there's kind of the paper situation out there, and then there's the real life. You want what delivered to you? This is what it's going to cost. And that's kind of what people, I think, are really misunderstanding and misinterpreting. I think the you'd like it when and it's how much is really just people are underestimating that.
And just one last comment before I go, Ted. You talked about the LNG trains in Qatar. Those trains were built by the Japanese, and those compressors, the compressors in there are, they're very sophisticated compressors. So depending on the damage, 3 to 5 years might be it, because depending on the damage on that stuff, the parts and everything that would have to be, obtained, and obviously you're not going to get maintenance people from Siemens or whoever built these compressors in there as long as drones and all are still flying in that area. So that could be a real impact there in terms of those two trains being down. So that's just something to think about too.
Yeah, no, and I tell you what we did is we looked at there was some of the largest pumps in the world were needed for a mine flood in Africa, and these things were like 2 stories tall, and they went to the Germans and they said, look, it's going to be probably 3 years, and the Chinese got them like within 9 months, and so I think the Japanese, they're going to go whatever it takes. It's going to be like get things done quickly. What's interesting in this time is we're going back to the old World War II of 2 years ago. To do anything, it would be, well, we can build this ship in 10 years. We can do this, we can build out these missiles, but it's going to take us a year or two to get the production up, and then it'll be with full production in 3 years. The United States, in particular, in the world, is shifting to the old World War II philosophy of we need to get stuff done, we need to get it out quick. What can we do? How can we make it work? And that's a big shift in manufacturing globally.
Okay.
So anyway,
Thanks for
okay,
your
well,
insight.
good call. Thanks, Charles. Yeah, I mean that's kind of the issue. And keep in mind, the Chinese are the ones hurt worse by the guitar thing, and that's why I think they're going to just move heaven and earth to get things fixed up over there. But first, we have to get a settlement, and as Charles points out, it's not going to be easy. The people don't have weapons. I mean, ultimately, if you degrade it enough and enough people turn against them, the thing will start falling, and the people left there will figure out that, hey, let's just, go on our way, hopefully. But the problem was the attack on the energy infrastructure, and that's what changed the game this week quite a bit. And so, but this still goes back to this manufacturing boom we're going to see in the United States, which is long-term going to really help the United States. And I mean, it's there. It's data centers. It's defense companies. It's manufacturing plants, drug plants, chemical plants, all types of plants coming back to the United States. So there's a lot of things happening, but it's gotten more expensive. Shipping has gotten more expensive. Everything has gotten much more expensive in this environment, and so. So I think the question is, people are just now sort of sitting back and they're trying to analyze. And as I said, a month and a half ago, if I'm looking at let me just pull up the chart on the 10-year. The 10-year was dropping. As of March 1st, the 10-year was at about 3.9. It'd been up around 4.25, and rates were going to be going down. The Fed was going to be cutting rates, and that changed. And since then, interest rates have skyrocketed back well above that number to about 4.4% on the 10-year. And there was all this talk as soon as Chairman Marsh, the new Federal Reserve Chairman, got in. He was going to be cutting rates. So all of a sudden, we're not real sure with oil at $100 a barrel, and so all of these things are having a corrosive effect on valuations in markets, and this is why I think you want to continue to kind of protect yourself and manage through these type of markets. We're going to be writing about this in the Max Out Savings Report, and because you got so many things going up in price. We talked about urea, and sulfur urea. We talked about ammonia. We talked about helium earlier in the show. Up to a third of the helium in the world comes from Qatar oil field, the big PARS Qatar natural gas field. Helium is a critical component to make semiconductor chips. And there's LNG, there's LPG, liquefied petroleum gas for cooking in the third world. There's the fact that jet fuel elsewhere in the world is now going for $225 a barrel. That's over $5 a gallon. That's before taxes or anything else, keep in mind. And it's probably going up, from there. And so there's just all of these different pieces around the world. I was talking to a farmer yesterday, and he's pretty sizable, and they're like, look, we sold some of our grains, but we're holding some of them back now. And I'm like, yeah, fertilizer prices are going up, diesel's going up, everything you're using in farming is going up, so I don't see why. So people are going to plant less, which means agricultural products are probably going to go up. Because maybe you don't plant that marginal field. If your diesel fuel goes up 40%, which is in the last month, which is what it has, and your fertilizer's up 35%, and you got some marginal fields, you're like, I'm just not going to plant that one. It's that much less stuff. And so this is going on all over the world right now. And the thing, look, we're in really good shape. As much as we complain about oil and gas here, the price, $5, diesel fuel, and elsewhere in the world, we produce all our oil and gas, so there's a shortage here. And it goes in one pocket, out of one pocket into the other in the United States. So we're pretty well set. But other countries, as we talked about earlier in the show, if you look at about 85% of the liquid petroleum gas, liquid natural gas, which keep in mind Asia doesn't have a whole lot of it, so they import a lot. 85% comes from the Persian Gulf. I mean, these guys, it's tough. I mean, Japan imports 73% from the Persian Gulf, South Korea 70%. India about 42, 43%, Pakistan 60, about 43% from China. So these guys, they're all hurting. They're like, oh my God, what's happening here? What do you mean we can't get the gas? We're running low. Gas prices there are going to go up much more than they are here. So one of the problems we have is this is hurting us, but it's hurting the rest of the world a lot more. And that doesn't even get to these little countries like, Singapore or even tougher ones like, the African countries or Sri Lanka or places like that are some countries are having to go on 4-day work weeks because we don't have the gas to sit there and the gasoline, to run the operations or the jet fuel. So these are big changes happening around the world in here. And you got a stock market down 7.1% off the all-time high after 2 years of a good market. That's not exactly, the proverbial blood in the streets in the investment on Wall Street. I mean, that's not a big. So anyway, some of the things to think about in here. A couple things. We're going to be writing about this in our Max Out Savings Report. We're going to get a new one out this week. We'll get that out to you, addressing some of these ideas. We got the markets coming open Monday. I think the administration is going to try to put some type of positive spin so they can get oil down to kind of stabilize the markets. The markets aren't stabilized in here. They've really broken underneath their as we talked about, the 50-day moving average, the 100-day moving average, and under the 200-day moving average, which is a real red flag. And then the 100-day moving average is about to go under the 50. The 50 days going to go into the 100. And when markets go down, that's when you got to kind of watch those technicals. A couple things. Gold and silver had big drops in here. I think some of this has to do with I think some of the governments are trying to force down gold to try to weaken up Iran. If the sanctions come off of Russia, then that could be less positive for gold. We still like the sector. We think they're going to make a lot of money in it. As we said, we've been selling up at higher prices. We still own a lot. If there's a big sell-off, we probably pick up some more. But right now, it's kind of in a sell-off in here. But we hit $39 trillion in debt this week. We're still going to be spending like crazy, and the world is still. We're going to see more inflation from oil and gas. So this thing is going to play out again. You still want to have that cash. You want to have those hedges in place, and you want to be cautious in this world. If you need some help managing your retirement money, go to maxoutsavings.com. You can request an appointment with me here in Houston, Texas. I'll sit down and show you how we manage money using our value investing approach to the stock and bond market. Just go to maxoutsavings.com. Max Out Savings with an S, and you can request a free newsletter or get the phone number to give us a call to set up an appointment. Anyway, I hope everyone has a great weekend. We'll see you next week right here on the Max Out Savings Show. Remember that motto and philosophy, which should be yours: save aggressively and invest conservatively.
This has been the Max Out Savings Show with Ted Gioka, a presentation of Max Out Savings Advisors. Join us next Saturday at 10 a.m. for the Max Out Savings Show with Ted Gioka on AM 1070. The Answer.
AM 1070. The Answer.